What is going on, Ticker fam? Most of you here today are probably watching because you don't like to lose money. But then again, who does? Well, I can't imagine that anyone would want to be losing any money, which is why I made today's video, because you really need to know what to do when you're put into these types of situations. So there are basically a few things that you need to do, or actually not to do, in order to not only avoid losing money, but to essentially avoid losing about half of your portfolio. And when I say portfolio, for some of you, that may mean your trading account. Either way, it doesn't matter. What I'm teaching you here today is how to not lose money, how to survive a market crash should we see one, and ultimately how to make money and profit from a stock market crash. Now, this won't all be in one video because these are topics that each deserve their own video. So with that being said, this is going to be a 3-video series. You're starting with video number 1, which is what you're watching right now. So make sure you check the rest of them out. I will be dropping a new video every single day for this series. So for the next 2 days, you're going to have a lot of learning to do. That being said, you can pretty much consider this to be a free course on how to not only survive a market crash or any type of heavy volatility in the stock market, but also on ways that you can take advantage of any major drops or dips in the market should we see a market crash or even a market correction. So this is geared for any newer investors and traders, but may still come in very handy and quite useful, even for those of you that have been trading for a little while. Now, the stock market is a crazy animal, and you're going to have to learn how to tame it. So in this video, I'll be telling you about 3 major mistakes that traders and investors make that could potentially cost them half of their portfolio. Hopefully you're not making any of these mistakes, but there's only one way to find out, and that's to watch this video. So stick around because I think you're really going to like what I got to share with you today, and we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to yet another video. I do realize that this isn't a very pleasant topic for most of you, and I do understand exactly why. But after watching this video series, and you've got a lot to watch here because there's a lot to learn, but I guarantee that after watching, you'll be pretty well equipped to come out on top. And in saying this, I mean that you're going to come out on top regardless of what happens in this market. By the way, ladies and gentlemen, if you could take just 2 seconds out of your day to give me an early thumbs up, it would be greatly appreciated, and this is one of the best things that you could do to support this channel. But enough of that, let's talk about what's going on in the stock market. So, what are the catalysts behind this scary move? Well, first of all, let's establish that a lot of you watching today are worried about what's taking place, and this is especially true for those of you that are new to this. And when I say this, I mean trading, investing, whatever you want to call it. So let's think about all of this logically for just a moment. Now, let's think about your very own reaction when you first saw that your profits were disappearing. And I'm sure that a lot of you even experienced some losses, or at least what you believed to be a loss based on the stock falling below your buy-in price. So assuming that you were able to access your trading account while all of this was going down, think about how you reacted to all of this. Did you panic and sell any of your stocks? And if so, then pretty much your fear contributed to the overall sell-off. And if you did do it, just think about how many others that there were in the same position as you that pretty much were experiencing the same exact emotions that you were experiencing while you were looking at your portfolio tanking or crashing or going down, whatever you want to refer to it as. So you've got to think, we've got more retail investors active in the stock market right now than ever before. Okay, we've never seen numbers like this. There are many reasons for that. I'm not going to get into all the details because it would take a while, but we're going to keep on moving. So while this is a pretty good thing that we've got a lot of retail investors, it can also be a bad thing. And in situations like this, because we are talking about new retail investors, then you pretty much have to account for them selling off because they don't understand how the stock market works. So most of the people selling off didn't even have the slightest clue about why they were selling off, why the market was down initially to cause the drop that caused the chain reaction, which we're about to get into, that caused them to sell. When it all boils down to it, these people sold out of fear of their stocks going down. As they're watching their stocks go down, they're getting paranoid, scared, and they're selling off because they don't understand how the market works. And I will tell you the main factors that are responsible for the initial move, but the reason that I'm talking to you about the retail investor today is because you need to understand one very important factor that we're going to get to in just a moment. But I do have just one more question for you before we get there, and that is, did you set a stop loss? Did you set a stop loss on any of your positions? And if you did set a stop loss on your positions, did that stop loss get triggered? The stop loss is another major contributor to what we were seeing in the market. Specifically, we saw the market get dragged down, and the stop loss is partially responsible, and we're about to go over that. But let me first explain that you've got brand new retail investors and traders that are coming in by the masses, and most of these people think that a stop loss is the answer, and they think that this is the answer to all of their problems. But the real problem is that a stop loss is not a problem solver, and especially when someone is not familiar with support and resistance levels, this can actually hurt your account. And I can even take this another step further and tell you that a stop loss is not always going to get triggered and behave in the manner that you're expecting it to behave in. So if you had a normal life and were trading in a normal market, if there even is such a thing, then a stop loss will act in the way that you are expecting it to act in, which means that you're not going to lose any money, you're not in any danger, and then it will be a very good thing. Unfortunately for you and me and everyone else that is thinking about using a stop loss, they don't really work in the way that we expect them to work unless we are just in normal market conditions. But if there's any kind of bad news, even fake news, or anything, periods of volatility like the one that we're experiencing right now, guess what's going to happen? Well, chances are that what'll happen is that you're going to see a violent move towards the downside and perhaps lose a lot more money than you were expecting to lose. And I'm about to explain this to you right now. Of course, you would only be familiar with this if you've experienced a violent move to the downside while you've had a stop loss set, but I'm going to give you a very quick and pretty much nasty scenario of how this could play out for you. So let's say that you're holding a stock. It's a $10 stock, and you have your stop loss set at $8. So the most you could lose is $2 per share, right? Unfortunately, and I really hate to be the bearer of bad news, but this is not how the stock market works. Because if we see a gap down, a hard and fast gap down, this can happen on bad news, during a flash crash, even on fake news, as I've mentioned before. This does tend to happen a lot, and what you actually need to know about how a stop loss works is that once it is triggered, the stock is going to be sold at market and at the best available price. So this means that your $10 shares could possibly be sold at $5 instead of the $8 that you wanted, or potentially even lower than that. So essentially, whenever you do set a stop loss, you pretty much lose all control. You're no longer in control of your own stock, and you're definitely not in control of your own money. So the only way that this scenario could get any worse, in my opinion, is if you put the market maker, or maybe one of those algos that they use, in charge of your money and gave them permission to pretty much sell your stock at whatever price they wanted to. Hold up for just a minute here. So actually, that's exactly what you're doing every time that you set a stop loss. And these kind of games are common for algos and the market maker to play every single day in the market. It's just not common that it may happen to you, or that these games are played with you every single day in the market, but I guarantee you that they're playing these games with somebody every single day. For one, the market maker and the algos, they know exactly where you've put your stop loss, and they know exactly how many shares you've got that are going to be sold if that stop loss is triggered. But it's not just your stop loss that they know about everybody's stop losses. And this doesn't necessarily mean that the market, or the market makers rather, will take you out every single time, or even that your position will be sold below your stop price every single time. That's not what I'm saying. That's not at all what I'm saying, and I want to make that clear. Otherwise, I'll have about 1 million comments from haters that are telling me that I'm dumb and I'm lying because they always use stop losses, and this has never happened to them before. So again, here's my response to that. I'm not saying that this will happen to you every single time. What I'm actually saying here is that you're basically playing a game of Russian roulette every time that you do set a stop loss. Now, I do realize that some of you still may not understand this, so before you comment talking crap, let me try to explain it another way, okay? You're pretty much sticking your hand in a box of chocolates and grabbing a random piece of chocolate, and you're putting that piece of chocolate in your mouth without even looking to see what type of piece it is or what's in the middle or in the center of it. You're just eating it blindly, okay? So my point is, a stop loss is like a box of chocolates. You never know what you're gonna get, and you may not always like it. So I think it's safe to say that we can pretty much move on now. I do apologize to all of the friendly people that never leave mean comments on any of my videos that make me lose sleep at night. But why am I telling you all about stop losses? Well, most of you probably think that you got the point a long time ago, but the truth of the matter is that if I were to surprise you with a pop quiz right now, you would most definitely fail, okay? You're going to get these answers wrong. So 2 reasons for me to be going into this topic. Number 1, I have a lot of newbies here and people that are new to this, to stock market trading, or pretty much to investing. And these people do need to know and be aware of what is going on. And number 2, I'm trying to prove a point to you. And that point is that if you're not in control of your own money, then the market maker is definitely controlling it. So put it this way, 11 times out of 5, this son of a gun will choose himself over you. So this goes back to that chain reaction or domino effect that I brought up earlier, except this causes the sell-off to become even more extreme than it actually needs to be. So stop losses are taken at much lower price points, which leads to panic selling and triggers more stop losses. And then before you know it, stop losses are taken out much lower or at much lower price points, which leads to more panic selling and then triggers even more stop losses. And before you know it, guess what happens? We have ourselves an overreaction. And what I've just described to you is pretty much exactly how the overreaction is born, my dear friends. And the overreaction can work both ways. So to give you some examples, or 2 examples to be specific, it usually does work this way when the stock market, or let's just say a specific stock, is going up. People get FOMO. They start panicking and they want to buy in at the highest that this stock has ever traded before. They're going to buy in because they're getting FOMO. They think they're going to miss out. Well, haven't you ever heard about a market correction? And if so, why in the hell are you buying at the very top? Ask yourself that question one time. You're pretty much going to have to turn your emotions off, okay? You can't be so sensitive. You're going to have to turn your humanity switch off, okay? And don't turn it back on until the end of the trading day, or it's possible that you may lose money because you're going to do the exact opposite of what you're supposed to be doing, because you're going to be doing what the rest of the 99% does. And that's not how we make money in the stock market, okay? So to reiterate my point here, you buy at the high because of FOMO, and then you sell out because you're scared when the market starts crashing, or when the market starts correcting or dropping, or when you're thinking that the market will drop. So you're selling at the very lows. When you do this, you're taking losses that you otherwise would not have taken. All right, just because you're down does not mean that you're out. You're not out until you actually sell. It's best to pretty much just not sell the stock at all if you're down, because you're pretty much just giving it away and taking a loss at that time. That could probably be avoided because the market will always come back. But there are a couple of reasons that you may want to sell or may need to sell even while you are down. And I'm going to go over those two reasons very quickly. Reason number one, that would be if your thesis changes or maybe something fundamentally changes in the company. You just got some bad news, you know it's going to tank hard. It's not what you previously thought that it would be. So you pretty much are going to cut your losses and get out. Now that's if you're investing for some period of time. Reason number two would be margin. If you go over on your margin, you're going to have to sell. Otherwise, they're going to sell for you, or your broker's going to pick the stocks that it wants to sell for you. You definitely don't want that to happen. It's pretty much you, again, losing control like we talked about earlier. Just a different way of losing control. But either way, they're going to get a lot of money out of your butt. If you are expecting a market crash or any type of correction or stocks coming down, what you'll want to do is pretty much get off of margin as fast as possible, because you want to use all of that margin whenever the stocks are at the lowest price possible. But you can also just put that margin aside, or not use it rather, and then whip it out whenever you see red days like the one that we just saw today, this morning, and yesterday. Now, those would have been some perfect buying opportunities had you had available margin. But if you don't, you can only blame yourself for not being rich right now. All right, Ticker fam, I think this is going to cover everything that we needed to talk about today. So stay tuned for the video that drops tonight, because I actually recorded this video last night, but not dropping it till the morning. So tonight you'll have another video, which will be part 2 of the series, and then a part 3 the following day. So I look forward to you guys watching this, as crazy as that sounds, and I will see you guys in the next video. But before you go, if you haven't done so yet, please go ahead and tap that like button very gently, or smash it, whatever you prefer. And of course, if you're not already part of my family, I can't call you Ticker fam if you're not. So please go ahead and hit that subscribe button, because you're going to want to be notified every time I drop a video. You're going to want to be part of this family, because we make money together, and a family that makes money together is a family that stays together, or something like that. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools, and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe, because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.